There is a certain kind of person who sees the world not as it is, but as a collection of interconnected systems. They don't just see a basketball game, athletic talent, fan psychology, media rights, real estate logistics. They don't just see a struggling company, operational inefficiencies, untapped market potential, human capital waiting to be unlocked. Stephen Pagliuca is one of these people. He is an anomaly in the worlds he occupies. Too much of a data-driven financier for the emotional world of sports, and too much of a hands-on operator for the detached realm of high finance. The journey begins not in a boardroom, but in the rigorous academic halls of Duke and Harvard Business School. This was the crucible where the foundational tools were forged: an analytical mindset, a fluency in the language of numbers, and an understanding of economic theory. But education, for Pagliuca, was never the end goal. It was the entry ticket. It was the key that unlocked the door to the world where theory met messy reality. That world for him was Bain Capital. In the 1980s, private equity was nascent and often misunderstood. But within Bain, a different philosophy was taking shape. At Bain, the model was not simply to buy, strip, and flip. It was a far more intensive, almost consultative approach. It demanded more than just financial engineering. It required a deep, granular understanding of the businesses themselves. In 2002, Pagliuca made a move that seemed, on the surface, to be a departure from his established playbook. He became part of an ownership group that purchased one of the most storied franchises in sports history, the Boston Celtics. To the outside world, buying a sports team can look like a vanity project, a trophy for the ultra-wealthy. But to see it that way is to miss the point entirely. For Pagliuca, the Celtics were not a trophy. They were another complex system. The challenge was twofold. On the court, the team needed a strategic overhaul to return to its championship legacy. Off the court, the business of the Celtics was ripe for modernization. So they empowered basketball operations to acquire the talent needed to build a championship contender, culminating in the Big Three era and the 2008 NBA title. This was not just a victory for the city of Boston, it was a validation of a core business principle: invest in your product. They invested in technology to improve engagement, maximized media rights and sponsorships, treating the brand as a dynamic asset to be grown. To look at the list of companies that Stephen Pagliuca has been involved with through Bain Capital is to see not a random collection of assets, but a sprawling, interconnected ecosystem. Burger King, Warner Music Group, The Weather Channel, alongside less glamorous but equally vital players in industrial services, software, healthcare. What connects these disparate entities is the consistent application of a core set of operating principles. Pagliuca and his colleagues at Bain view their portfolio not as a static list of holdings, but as a living system, where lessons from one part can be used to nourish another. A key element of this approach is the focus on leadership. This isn't passive recruitment, it's an active partnership. Establish clear performance metrics and incentives that align management with owners. Pagliuca sits on boards, connecting dots so the collective intelligence of the portfolio exceeds the sum of its parts. In a world that often romanticizes the gut instinct of the visionary investor, Stephen Pagliuca represents a different archetype: the scientist. It begins with a hypothesis, grounded in deep research and data analysis. He and his teams don't fall in love with a company's story. They fall in love with its numbers, its market position, the verifiable evidence of an opportunity. This disciplined, data-first mindset acts as a crucial filter, screening out the emotional biases, market hype that can lead so many investors astray. Before any investment is made, due diligence spans market studies, talking to customers and competitors, and building models to test scenarios. The goal is to understand the risk from every possible angle. Patience is perhaps the most critical ingredient. Active, engaged stewardship over years. Buy and sell, both driven by data and achieved objectives. The influence of a figure like Stephen Pagliuca cannot be measured solely by financial returns or the enterprise value of his portfolio companies. There is a broader ripple effect: public service, philanthropy, community building. Business skills applied to societal problems. serving institutions like Duke University and engaging in public policy discussions with analytical rigor. Not just checks, time, network, and strategic insight. Targeted investments for outsized outcomes in education, healthcare, and economic development. His 2009 Senate campaign applied a data-driven approach to public concerns. Though unsuccessful, it underscored transparency, accountability, and measurable results. Business success fuels civic impact. Civic trust unlocks business opportunity. Success is defined not just by what you accumulate, but by the value you create for the communities and institutions around you. So, what is the ultimate lesson to be drawn from Stephen Pagliuca's quiet but relentless ascent? It is not a secret formula or a complex algorithm. It is a simple, powerful idea we can call the Pagliuca principle. Enduring value is the product of patient capital, operational excellence, and a deep understanding of human systems. First, think like a scientist, not a speculator. Base your decisions, whether in investing, business, life, on data, rigorous analysis, and a healthy skepticism of hype. Do the homework. Understand fundamentals before you commit your capital, your time. Second, embrace the power of incremental improvement. 1% better every day compounds. Third, recognize all systems are human systems. Invest in talent, build strong teams, and create accountability. Finally, play the long game. Resist the quick win, the easy shortcut. Build your skills, build your knowledge, build your investments with a horizon of years and decades, not quarters. Success is assembled piece by piece, deal by deal, lesson by lesson. Focus on making things fundamentally better, and the success will follow.